Hello everyone, this is Jim from Auto Finance. Welcome back to our channel. We are with you on 6th of April intraday analysis. Alright, before starting our video, I will share some news with you. Then I will just go ahead with your factory orders in Germany has fallen dramatically minus 2.2. Expectation was a slight decline in February, but right now it's bigger than expectation. It has declined massively. It's because of the dramatic energy rises, so it's losing its competitiveness. That's why it's happening. All right, and in the coming months, probably it will be worse than expected, because if you just buying the gas and oil for high prices, your factories will be producing on high cost. If you just produce high cost, you will just raise the prices. There are a lot of countries, a lot of companies waiting to grab some shares of these German and European brands. That's why we will just see a good example of that one. Energy prices is rising everywhere, but they have some other choices. For example, let's say China. They have still relations with Russia, and Russian oil cargoes are offering $35 less on that one, on prices. And they have just mentioned that one. We are not mentioning about the price hike right now. We are talking about the level before the war. So that means it was around like $80, and they are just buying $55 per gallon, so per barrel, sorry. So it's just making them more competitive. Still, there are other problems in China as well. All right, never mind. And we have seen the PMIs, construction PMIs in Europe. Most of them, actually all of them has declined. This is also another problem, because for construction as well, steel, cement and other things are important. With the high energy prices, they are making new highs, new rises, and it's limiting new orders, new construction movement. That's also another thing. All right, let's start with our first chart. The first chart is Tesla shares. As you can see here, it has tested really high levels, but right now it's on decline. And this is a slight decline, but as you just remember, and we have seen really high level of these rise in the opening of Giga Berlin. Tomorrow is the big day. Giga Texas is opening. Anything Elon Musk say on that one, maybe new promises, new like targets, these kind of things will just push the price of Tesla higher level. That's the expectation. Tonight there's FOMC. On FOMC, we may see some decline. So a move something like this. First decline with the FOMC expectation, FOMC minutes, then on the next day rise with Tesla Giga Texas factory opening. It's happening tomorrow. As I said, it's a big day for US company. Reason is, on that factory they will produce Tesla semi and Cybertruck and new battery chemistry. All these will happen on that factory. All right, let's go ahead our second chart.
You are ready to win with us. GAN Markets.
All right, our second chart is, as you can see here, NASDAQ. NASDAQ has tested the support level this morning, and right now just going under that one. If it can manage to go down below this level, so we may see 14,300 levels in close term. Reason for that, reason to see that one, as you can see, mainly expectation of FOMC. They are really expectation of tightening, balance sheet tightening, and some clues on that. If that happens, and if that happens this year, we will see massive declines in US stocks because they have risen so fast. So fast comes, fast goes. It all happens like this. Let's look at our last chart. Alright, our last chart is euro dollar. As you can see here, euro dollar is on decline. Main reason for that one is dollar index and the new sanctions by European countries. So euro will be more fragile against all other currencies because there will be a lot of trouble. Let me just clarify you something. The level of interest rate right now is slightly below zero, and on that one, and inflation is 7.5. So there is no real income from interest. So they are just doing this one because the government need to borrow a lot of money to compensate these losses. They are just for example, for France. And they have started to compensate oil and gas prices at the pump stations, gas station. They are subsidizing some of that prices, so they need money. Italy, they are having problems with old population, and their healthcare system is just taking a lot of money, so they need to borrow a lot of money. Spain, Portugal, and these kind of countries. And in Germany, they are trying to help other European Union countries with European funds, and so they have to borrow. If they raise the interest rate higher, if ECB does that, there will be a lot of interest costs to these countries, and it will just lead another crash. But reality is 7%, 7.5% inflation, and probably it will go much more higher. It's food inflation. We will just see, but it's not happening. So as long as these kind of things doesn't change, we will see decline will just go on. And the critical level, as long as it's under 1.10, it's bearish. For some pressure, to make some pressure, we should see the level of a 1.10. It's important. All right, thank you so much for watching us. We will be together on more news, and we will cover more charts with you. Have a nice and profitable day. Bye.